Hi, this is Chris Buss with Traders Profit Compass. What I want to do tonight is zoom out a little bit. I know a lot of times we get focused in on the short-term active trading, but what I want to do is go out to the daily time frame, run through the indexes, run through big cap tech, and then go through the individual sector charts. And what I want to point out, this is primarily for swing traders on the daily time frame. Okay, so what we want to determine is what our stance is going to be in the days ahead, and what would trigger a more bearish view. Where are the sell signals? Where are places where bounces could occur? Things like that. So we have, actionable levels that we have in our mind as, price does what it does. We want to be able to react with relative certainty, what we want to do, where we want to be, how we want to be positioned, etc. And what I mentioned before in the midday video, we're coming up on a 3-day weekend, heading into Friday with a relatively bad day of selling today. So let's get inside the head of traders. Do you really want to take on risk after today and heading into a 3-day weekend? In my mind, it's hard to see. That said, there are a lot of conditioned dip buyers out there that might perceive this is the golden opportunity that they've been waiting for cheaper prices, I think they're going to be in a minority. What I think is going to happen, and I always try to think about what would screw with the most people. That's what the market does. I think one of two things is going to happen. There's going to be a bounce with primarily retail buyers stepping in, and then they get run over either tomorrow afternoon or Tuesday. The other scenario is they park it, the market, they park it at a place to keep everybody guessing into the weekend. And that's the scenario that I see for tomorrow. Find the places on the chart, the key indexes, the key sectors, the key stocks, and park it right at a place where if you're going to go into the weekend, you got to decide where you want to be. And they never make it easy. I see them parking it at a place. And one other thing I want to bring up. I had posted a video of market wizard trader Peter Brandt with 40 years of experience. And he says one of the most important tells for a market is what happens on the day before a 3-day weekend. And that's been going through my mind today. And we want to watch tomorrow very, very closely and see what they do, because I think it'll be important for what happens Tuesday. The other market adage that's out there, bad selling never ends on a Friday. It carries over, because all the mom and pops, the people with real jobs, they're just getting the news now. They weren't there today. They're seeing their portfolio or looking at it. Other people that are less involved will figure it out this weekend, and then here they come making a decision on Tuesday, like I got to get out, whatever. So the selling carries through, and then when price hits a key level, then you get the bounce. So that's just 30,000 feet, some thoughts on the top of my head. Let's dive into the charts. So here's the SPY daily. We've still got price within this rising channel. We did lose this intermediate trend line today. Came down and tagged the 20 and got a baby bounce off of it. Now tomorrow, I would imagine that they're going to park it right on the trend line down here about like 342.5, just below the 20, but holding this trend line. And then Tuesday we find out if they take it higher or take it lower. The level that I want you to focus in on in the days ahead is 33.90 on the SPX. Because realize in the SPY, they're taking dividends out every quarter and then they readjust these prices. So, yes, after all the adjustments, 335 was the February high. But I want to go off of SPX. We know that number, 33.90. And remember what we say. When a stock breaks out, it should not come back below the breakout level. And if it does, it's pretty bearish. So if price were to break below next week and start closing below SPX 33.90, down here below SPY 335, come in here, start closing below, that makes this entire breakout look fake. Now, does that mean price can't reclaim it? No. If it did, or if it does, that would be a buy. It's the same thing that happened on Microsoft in the last couple days. Broke above, came back below, and then reclaimed it. Whenever you reclaim a key level from below, that's a buy. So, in the days ahead, we want to watch for a trend line break, which would be a daily sell signal, a break below the old high, and then see what it does at the 50 EMA here at 330. So those are the key levels. 340, 335, 330. Another 10 points to the downside from, actually probably more like 12 or 15 from where we are right now. So keep those levels in focus. Qs, rejected from the top of the channel, could not hold the 8-day, lost the midpoint of the channel, tag of the 20 that held. So here, I want to watch this key area at the 20, which is at 284. The bottom of the channel here at roughly 283, 282.5. It would be my guess tomorrow that, again, price will be soft. They'll come down here, park it right here for the weekend, right on the lower channel. And then what would happen on Tuesday, or actually, tomorrow night at the close, are you going to go home short or are you going to go home long? Because Monday night, if you're not in, there's going to be a gap, there could be a gap down and then deny you a good entry. That's the reason for parking it at a place where you got to decide. You got to decide if you're going to take that weekend risk by, oh man, bad selling never ends on a Friday. Do I want to take home some shorts or do I think they're going to bounce it? If you don't decide, then Tuesday morning, it is what it is. It either gaps down or goes higher, but you're not going to be in. And if you're in, you have that over the weekend risk. So tomorrow afternoon, we'll have to make a collective decision, or each, individually, how we want to play it. Okay? So we'll revisit that tomorrow afternoon. But my guess is they park it right here at, 283, right in that area, and keep us guessing. IWM for me is a lot simpler. We've been in this trading range between 155 and 160. We made a couple of runs at 160 and were rejected. Today, we closed below 155 and below the 20. They may park it at 155, no way of knowing, but I think we're coming down here to this 150 level for a tag of the 50 EMA and tag this key support level. I think that's where this one is going. You know what we always say, when you're in a trading range and you break below, and especially close below, then that's a $5 expected move to the downside. And I think that's where we're going for a tag of the 50 down at 150. And anything can happen, but I'm more sure of this than where they're all going to park the other ones, SPY and QQQ. If they go lower tomorrow, I expect this to go lower and make a move towards this 150 area. All right, let's jump into big cap tech. Facebook. We've got an intermediate trend line here that is held. We tagged it today. And we've got this pretty nice uptrend line off the lows coming in here around 270, 275, depending on when it gets there. I don't think there's a trade to make right here, right now on Facebook as far as swing trading goes. For me, it would have to lose the 20 down here at 280, 278 at the 20. And then if you want to see it go down here to, 268, that's fine. But the real sell signal would be on a break of 265. And then you've got the 50 coming in here as well. This would be a location where I would imagine there would be a number of dip buyers looking to hold the trend line, bring it up, and then if there's more selling, take it back down. I highly doubt that it's really just going to slice through, the 20 and the 50 and this trend line all at once. We're going to get a reaction bounce. It may come tomorrow here, right here at 280, bounce it a little bit, and then pick it up next week. But this is the key location down here at 265, right in that area where the 50 and the trend line would intersect and act as support. Apple's in a lot more precarious setup. We had the mini blow off top. We had the split. Anybody who bought the split is underwater. Now they've brought it back down to this support level at 122.5, right at the 20 EMA, and this trend line off of the March lows. If it loses 122.5, it's coming down here to 115 pretty fast, and I would imagine coming in for a 50 EMA test. So this one here may hold the key. If they can hold the line tomorrow at 122.5 and keep everybody guessing, we'll figure it out next week. But if they break this tomorrow, that would be a solid sell signal, and if you're trying to swing it, a place to get short against 122.5. This one is clear as a bell. It's sitting on the 20 and the uptrend line. If that breaks, going lower. That's all there is to it. So 115 would be my first target, and then a 50 EMA test down at 107.50 would be my second swing target. Amazon, this one too is a little precarious. You can see we had a big divergent high right here. We had both RSI and PPO lower when price was higher. We had price coming into this wedge. It was rejected. Now it too is sitting on a well-defined trend line, sitting on the 20 EMA. There is nice support at this 32.50. And for me, trying to capture this is just not worth it as far as a swing trade. I'd have to see more. I think there would be a good chance this to break or come down with a touch and bounce before the close tomorrow. I wouldn't jump the gun on this one. I think there's bigger fish to fry, better setups. Now that doesn't mean if you're an active trader on a 15-minute or a 30-minute chart that you can't make that trade intraday. I mean, you know, that's $75 or so. I mean, that's worth it intraday. And with Friday options, you know, if you get that unidirectional move down here, I mean, you can make some decent money on that. But on the daily time frame, I personally wouldn't mess with it. I would wait to see if this 32.50 level held. That would make all this look like a fake breakout after all this chopping around. And then my target would actually be, my first target would be 3,100 at the 50. And my second target would be a back test of the bottom of this box at 3,000. And then if that broke, well, it's all over. You can see this huge price void here. Then you'd be looking at a 200 EMA test, $500 lower. But that's looking way ahead. I would expect a bounce here at 32.50. I'd expect a reaction at 3,100, and I'd expect a long hard look here at 3,000 before that broke. Microsoft still in a nice channel. Got to the top of the channel, was rejected. Basically held to 20 this afternoon. This lower channel line comes in at 215. That's where I would expect them to park it tomorrow. As far as major sell signals on the daily, you know, from a technical perspective, yes, if this broke, you'd get a sell signal, but I would wait for the 50 EMA to break. And if that breaks here at 209, I would expect them to bring it back here towards that original breakout level at 187.50. I would expect a bounce here at 200. There may be some dip buyers at that level, but I think once the 50 breaks in this key level here at like 209, I don't think that would hold. I think you get a bounce there. You may get a bounce back up to 207.50 or 209 and then come back down. So that's what I would be looking for on Microsoft. I think that would be a hard one to short here tomorrow, even if this line broke. And I wouldn't expect it to break until next week if it's going to do that. Google, I didn't draw an intermediate trend line here, but you can see if I were to draw that, that would have broken today. Again, on the daily time frame, nothing to mess with here. I would want to see the 20 go, and then this well-defined trend line coming in, depending on when it got there at this 1575 level. Now, if that broke this trend line, I think you're coming back here to 1475, and that would be a nice trade to make. Looking for a $100 move. You do have the 50 coming in here at like 1530. You'd probably get a little reaction there, possibly a back test of this 1575. But once the technicals go, and what I mean by that is a break of this trend line, that means this whole move was fake, a fake breakout, false breakout. Then I think the door opens for a move back down to this key support level at 1475. And then, of course, if that breaks, you're looking at a 200 EMA test. But again, that's down the road. Netflix, I don't see a lot to do here on the daily time frame. This has a much different picture than the other ones that have been really extended. This one did a lot of consolidation after this rug pull. Spent a couple of months. We got this big surge and a push towards the top, which ultimately failed. But we've got a line of support here at 520. We've got the 20 EMA coming in here. We've got the trend line coinciding with this 50 EMA. I don't think there's enough to mess with. I think you'll see some dip buyers if it reaches the 50, and then they're going to bounce it. I would wait for this trend line to fail, and actually I would see what happens at 480. That would be a location for them to bounce back test this trend line and then take it down. And you can see that below 480, there's this sizable price void. There's a $40 move right there with nothing to stop it. That's the kind of trade that I would like or take. That's a high probability trade, especially if you get a bounce before. Get some dip buyers here. They bounce it up. If that fails, that would be a location where I would take that short at 500, assume, and see, once there's that first reaction, they bounce it and then they take it down. The second time, it won't hold. That would be my primary scenario, that the second time through, it won't hold. The first time it will hold, it'll bounce. They'll back test this line and then take it down. But there's a lot of work to do before that scenario were to play out. I don't want to mess, and I don't think you should either, mess with anything in this area. If things really firm up and they bounce it here, who knows? They could break it out, and then that would be a place to buy. If this was just a one-off, and everybody piles back in on Tuesday, if they take it back above, buy it. That's what I would say. Tesla. Keep in mind, I'm not the world's expert on Tesla. I haven't been trading this, but just from a technical view, got a nice intermediate trend line coming up off of this low. They had the split. Everybody bought it, and then everybody who bought it is now losing. Okay, sitting here on the 20 EMA at 397. They may bounce it here, but if they don't, they're coming down here to 350 to test the trend line, and probably will come down here to this 325, 327 area. There's a little zone of support right there. There I think you'll see dip buyers. The ones that weren't in and now it's going back up again, I think you'll see a significant number of people try to buy that dip at this trend line. And that's an objective long. Hey, if you're bullish, that would be a place where I would be looking to buy. Now, if it fails in this 325 area, 327 area fails, then it's coming down here $50 lower to 275. And then if 275 fails, it's basically over. Things will move fast if that level were to break. Again, a lot of work to do between now and then. For right now, focus on the 20 right here at 397. If that fails tomorrow, look for a move for them to park it right here on the trend line for over the weekend. And see, if you're a dip buyer, you're taking on some significant risk over the weekend. But I don't think that'll stop anybody. I think they'll try and buy that dip. But then you walk in Tuesday morning with a gap down, you're dead. So be careful if you're a Tesla bull and they park it right on that trend line. That would be the risk that you would be taking if the broad market, they pull the rug over the weekend, then you're trapped. Then you got a gap down and there's no way to get out. Quickly through the sectors, there's a lot of them here that, I know probably there isn't a ton of interest in, but I want to run through them anyways. I think it'll give us a nice look across a broad spectrum of sectors to see where they stand. Okay, materials, fake breakout. They brought it back. Actually, it's still holding its trend line. This isn't the major trend line off the low, but I think right now this is perfect for where we're at. We've got the trend line and the 20 basically together. Now, if the 20 were to break, I think we're going to come back here to the 50 at 61 and then back down to this support level at 59.5. This has got all your gold miners, all your specialty chemicals, your commodity chemicals, all that stuff. So those would be the stocks. If you were looking to do individual stock picking, the DuPonts and all that stuff are in this sector, PPG, all the miners. If there's a risk-off moment and they take gold with it, gold miners and silver miners are all in this sector. And if they break this little wedge here, there's some downside there. Communications is an important sector. Basically, what you're tracking is Facebook and Google at 44%. You've also got Netflix in this sector as well, internet sector. We've got an intermediate trend line coming up. We had this rising wedge. We tagged the top, was rejected, and we're still above this intermediate trend line. So, all things considered, really not a whole lot of damage at this point. We still have the 20 here at basically 62, 61.75. If we lose this intermediate trend line, we're going to come down here and test this 60-50 area right here on this trend line. But until then, I don't think it's anything you want to go gonzo short. I think the place to go gonzo short is on a break of this trend line in the 50, and then you can get $3 or $4 to the downside coming back in here to this 5650 area. I think that would be a natural first target if this trend line in the 50 were broken. And if you're not into, trading Facebook and Google for whatever reason, the price or, the cost of the options, or you just don't want that volatility, XLC, is a nice way to go, because at the end of the day, you are tracking those three stocks: Facebook, Google, and Netflix. So that's a nice little basket if you want to approach it that way. I think that would make a lot of sense. Energy has been dead, forever. They keep saying, here we go, and then it rolls over. We lost this area in the last couple days. It's 35.50. I think the real line is 34. We've got this significant low here that held, and it's held several times before. If you want to hit 34, and if you see oil fall apart, we're going to come down to 32, and if it loses 32, it's over. Take special note of the EMAs. I mean, this is full bear mode. Below all the EMAs are stacked bearishly. The 20, everything below the 200. We got the 50, the 20 below the 50, the 8 below the 20, and price below the 8 and key support. So, there's no problem taking it short here against 35.50. If you want more of a unidirectional trade, since there's this support level here at 34, you alarm 34, and if things fall apart, then you hit it. And we're coming down here to 32, and if 32 fails, it's over, because there's nothing down below. And you'd see oil, lose $40, come back into the 30s, and really start to accelerate this to the downside. I did see some bearish order flow in Chevron today, so maybe that's what these guys are looking at. But oil's been selling off to a certain degree. There was a stick save today. It was down 3%, and then it just closed down fractionally. So obviously watch oil. If you're trading energy, they'll move together. So anyhow, 34. This to me is a real interesting setup. Everybody and their brother has been saying for years, pile into the banks. I've never bought it. There's been times I've tried to short it and it hasn't worked, and there's times I've tried to short it and it has worked. This to me looks suspiciously like a double top. We go up, we come back to support, we go back up, tag the recent high, and fail impulsively. Now this double top would not execute until we lost 34.50, but then we've got this distance here. Once we get back in this trading range, if we lose 24.50, I think we're coming down to 22.50, because remember what we say, once you exit a trading range and then you come back in, that's bearish. And with this structure moving back into this range, that wouldn't be good for financials. We would have lost the 20, we would have lost the 50, and then we would have lost the 200. So then price would be below everything, I would hit that with a bazooka if you saw the 50 fail and this 2450 fail. To me, that's a bazooka short with a stop just above. If you get stopped out, it's a paper cut. If you're right, huge win. And I would really be interested in that trade. Have to see, what happens. I'm not interested in this too much. You got the 200, the 20, and the 50. I'm not going to mess with that. I got to see more. Yeah, it looks like a double top, but I don't want to go out here in the middle of the range. I think you wait here for either a bounce or a fail, and then you've got a very objective line where you can set a nice stop and know exactly if you're right or if you're wrong. Right here, you have no idea if you're right or wrong. There's too much in between the levels. That's a low probability, non-objective trade location. So you got to wait. XLI, nice trend line off the lows. Coming in here, touch here, multiple touches, another touch, up to the top of this rising wedge, an impulsive fail that took out the trend line with a tag of the 20. If this breaks down below this 76 level, I think that's an objective level. If you want to take a shot at a short, be aware that you've got the 50 here a couple dollars lower. Be aware that they might come down to the 50 and bounce it back to 76 and then pull the rug out for a test of this 7150 at the 200, because below 76 this breakout looks fake, and there's nothing more bearish than a fake breakout and below the daily trend line. So that would be an interesting short if you're willing to handle a potential bounce here at the 50. Another way to play it is, go short term, go a couple weeks out, see how it handles the 50, possibly cover there, and then recycle on the bounce. If you see support there, cover your short, take the $2, let it bounce where I would imagine it would fail at 76, then recycle your short with a tight stop above, and then it comes down to this 7150. I think this is the key level here. 76. Wouldn't be surprised if that's where they park it tomorrow, somewhere in there. They're not going to give you a free shot tomorrow, I don't think. I think they're going to make it a little more difficult than that. Here's the big one. Everything is driving off of tech. If we don't see XLK and mega cap tech and the Qs break down, the market's not going to break down. This is where there's air in the balloon. This is where those big names are overextended. And if we're going to get a more extended sell-off, it's going to have to be led by tech. If tech stabilizes, SPY will stabilize, and it'll be, much ado about nothing. We don't have enough evidence yet to go, like I said, gonzo short. Here we've got a rising channel. The dashed line is a trend line off the low. And we've got the 20 right here and they all converge. So this is a massive location right here at between 117.50 and 120. This little zone right here. I would imagine tomorrow they would want to park it right in here. They may give you a head fake, a deep look below, and then close it back on the line. Be ready for that tomorrow. A look below, and then coming back up to park it here. And then, again, you got to decide how you want to handle the weekend. But I think of all the sectors, this is the key. Excuse me. On a break of this 117.50, I think we got $5 to the downside. Coming down here to test 112.50 and the 50 EMA. That would be a place where dipsters probably would want to step in at the 50 and bounce it. They may bounce it all the way back up here to back test this trend line. And if there's more selling, then they pull the rug. That's a common game plan. Because remember, there's a lot of people that got locked out of this rally. They couldn't find a place to get in. And then they come down, oh my God, the 50. It's held all this time. Actually, not even any real test after the bounce. Just extending. There's going to be a lot of conditioned dip buyers. If this breaks, if the dip buyers here get run over, I don't think they're going to give up there. I think they're going to come back and they're going to try to buy this 112.50. And then, if there's a sell-off, they get run over. They say, they bounce it. Oh, we bought the dip. Great. Boom. Then they pull the rug. That's a scenario that I could see happening. That's down the road. But for tomorrow, look for this 117.50 area to hold. Staples, not a lot to see here. Still in the rising channel. Actually still above the 80 MA. We've got this trend line coming in right here about 65.50, let's say. We've got the 20 just below it. Then we've got a support level here at 64. I don't think this is anything you want to mess with. If you're long a bunch of staples, a lot of dividend payers, I think you're fine as long as this channel holds. I would be getting concerned if this 54 broke, because then you got, a potential run to the 50 and then a potential run down to the 200. But if you're parked in some solid divvy names, just key off the channel, and I wouldn't freak out at this point. Utilities have been in a box. I thought they might go today. They came back up to the top of the box at 61 and was rejected. I wouldn't even mess with this until either 61, a breakout, or 58.50 were to fail. Then I think you got downside here down to 54.50. But as long as this 58.50 holds, utilities will just kind of keep chugging along. You may see a breakout if there's some, big rug pull and everybody flocks into safety. You might see a breakout here. So, it's worth an alarm. It doesn't cost anything. So, set an alarm at 61 and 58.50, and those, I think, are the key trade locations. Bad day at the office for healthcare. We've had this rising wedge, and it's all come on bearish divergence. You can see that momentum peaked way back here in April and has been bleeding out ever since as price has been rising. So we had bearish momentum here. We've also had RSI fading, and now we've got an RSI break of trend and testing 50. We actually tagged the 50 EMA this afternoon, or got close enough, but we lost this trend line. My guess, if they don't do it tomorrow, I think this ultimately comes down here to 104 for the real test. And what I mean by the real test, this was the breakout level, 104. Again, like we've been saying, a break of 104 would make all this look fake. And then you see downside probably coming down here to 101 and then a test of the 200. So bad day, bearish divergences. I think this goes lower. We'll see if it holds down here at 104. We do have the 50 in between, and that, like it did today, should act as some support. XLY, more or less an Amazon tracking index. Nice, well-defined trend line. Still above it. No sell signals. Lost the 8-day, held the 20-day. Right here, the 20 and the uptrend line both coincide. If that broke, I think you got a nice little trade you could get for a move down to the 50 and possibly even an overshoot down to 137.50. That's a trade I would make. I don't think you're going to get it tomorrow, though. I don't think they're going to make it that easy. I think they're going to park it right here and make you guess for the weekend like we talked about. And then Tuesday, they let you know if they're going to bounce it or pull the rug. So it's not without risk. But if this were to break, if you got a solid, close tomorrow down in 145 land, I think it would be worth a shot. I really do. Not big, baby shot over the weekend. I think they would. I think they would pull the rug and come down here, because that would mean Amazon is losing its levels as well. And that's a little trading tip. If you're trading XLY on a split screen, you got to have Amazon, because one's not going anywhere without the other one. This has been primarily an Amazon run. So if they bring it down here, you want to see that Amazon has also lost key levels before you decided to take that shot over the weekend with a baby trade, not a ton of money on the line. If you see Amazon fail and this fail along with it, I think then the odds are in your favor that you would see continued downside on Tuesday. That would be a trade I would be willing to take. Okay, guys. Long video. I hope the coverage helped you in your analysis of how to think about things. We don't have many true sell signals on the daily time frame. I think this was the first shot across the bow, letting everybody know that stocks still can go down. It's not a one-way unidirectional market. Don't go off the deep end tomorrow. I don't think they're going to give us a clear, decisive look tomorrow. We'll decide that tomorrow. I don't want to prejudge it. I'm just guessing, because I've seen these Fridays before where they park everything, so you got to guess. And that's a hard trade to make, guessing on a Friday afternoon at 3:30 what they're going to do over the weekend. But I personally think ultimately there's going to be some more downside. I'm basically neutral right now. I did put on a baby trade on IWM just for tomorrow. I think we'll see some downside tomorrow in IWM, but I can cover that, immediately if they bounce it. It's not a big deal, but I don't have anything else. I don't think this is a place, I saw a lot of people saying, buy the dip today. No, thank you. Heading into a 3-day weekend with bad selling today and a Friday tomorrow. That's not my trade. I want to see things stabilize, and if they bounce it and I got to buy, a dollar higher, who cares? I want to be positioned right for this next move, and if it's down, I want to see the evidence. And I'll be the first one to go short when the signals are there. We just don't have them yet. And, so I don't think this, sitting here at 9 o'clock on a Thursday, it's not the time to be, balls deep long or short. If you want to take a baby shot or actively trade on a 30-minute chart tomorrow, that's great. We're traders. That's what we do for a living. I'll be doing the same thing. But I'm talking about on the daily time frame, duration positions, going out a few weeks, a month, 6 weeks, 2 months. I gotta see some more evidence, and then I would have a lot more confidence that they're going to take it down to some support levels, lower support levels, and then we can decide where to cover those trades and anticipate a bounce. So I hope you like the content. I hope it helps. If you like the content, if you're new to the channel, please hit the subscribe button, and I'll keep you posted on developments and timely content with a lot of trade ideas. Check out the show notes for links to the blog and to register for my content. You'll get it in your email box every single day. And again, keep you on top of these levels where you can focus on execution and you can lean on my levels. I think that's a winning combination. So have a good night. This has been Chris Buss with Traders Profit Compass. Talk to you next time.